Hello, traders. It's time to make our weekly review. Let's see how our portfolio perform. I hope that the last week hasn't been as terrible, as stressful for you as it has been for other traders. Let's take a look how market perform during the week. If we check from the previous Friday, market dropped more than 200 points, and VIX went up from 15 to 22, so it's approximately 50%. But our portfolio did quite well. You can see that altogether, all our positions, it's approximately $2,500 in plus. How I remember, previous Friday, it was approximately 1,500. So it means that our portfolio gained about $1,000. Unfortunately, I do this video when market is closed, and I don't know how accurate OptionNet Explorer shows numbers right now. It should show the price using closing prices on Friday, but I'm not sure. So please, who tracking our P&L day by day, just in comments, publish the correct numbers. So how I said, it's pretty good result when market dropped 200 points and VIX increased 50%. Our portfolio not lost, but even gained. And naturally, all of this was made possible thanks to our hedges, both portfolio and internal hedges. I would like to point out that we still far from fully forming our portfolio and the hedges planned for the future. So once this happened, I think that we will anticipating correction like manna from the heaven, because it's during this moment we will generate maximum additional profit. The key here is to learn not to sit idle, but to take profit from our hedges while setting a new one. So let's look what kind of additions and adjustments we made during this time. The first, on Monday, we added new tranche of our ladder strategy according to the plan and pair it with a delta hedge. Let me show you that position. I believe it is here. It's a 1C ladder tranche and DH4 delta hedge. We can see that altogether they are in small profit, about $170. It's not bad because it's a new, it's when market is moving down, it's the most problematic should be. Yes, of course, if we see just position itself without a hedge, it shows, but still good, very small loss, about $80. But with hedge, it's about 168 in profit, which is not bad. The second, we adjusted our C1 tranche on Thursday when our short puts reach delta 20, and we rolled them down and paying for it, partially taking profit from our hedge. In doing so, we reduced the position delta about 1.5 times. And let's look how this tranche look like now. So there's tranche C1. Oh, sorry, it's 1B tranche. And so without hedge, it shows right now $160 loss, but with hedge, which is D3, I believe. Yes, it shows pretty good profit, $550 because of hedge, of course. Hedge make pretty good profit during this market decline. And the third one on Friday, one of our delta hedges was up more than $1,000. And as planned, we rolled down our long puts, 100 points, and take profit and making this hedge debit free. And at the same time, we open new hedge, DH5. Let's see that position. Yes, it's DH3. You can see after the roll, 100 points, now it's debit free. It shows the worst case scenario. If market will stay above our tent, it will be $100 plus. This is our goal. And at the same time, we open the new one, this one, DH5. Same way as we usually do it. We bought 3 long puts at delta 10 and sell 3 500 points below. And the last one, which is the most unpleasant one, it's our oil position, which is unfortunately in loss right now. Let's wait till, yeah. So just to remind, we opened that about 2 weeks ago. It's 17 days already, DIT. So when we open it as a ratio spread, 1 long, 4 shorts. Why? Because price of oil was at the lower point of our range. It's somewhere here, and we open it, but price unfortunately continued to fall. And later we add another ratio, this time 1 long, 3 shorts. And because of market itself fall down, probably reason for that, oil continued to fall. And on Friday, we decided to make an adjustment. And what we did, we rolled down one of our highest long and used that credit to roll down our short puts. Let me try to show you that. If we go on, yes, it's how it looked like before the last adjustment. And we click here, next adjustment. It's quite slow because market is closed. Yeah, right now. So if we ignore the last the last one, this is how it looked like before adjustment, and we see that total position was about 1,500 loss, but after adjustment, we reduce our delta, make it less risky, but keep approximately the same tail profit. So now we still approximately 1,500 or 1,600. That's it. And we get in profit because of theta and because of market bounce up. That's it about our portfolio. Let's move to our questions, which you published. The first one, at some point, I would like to see a video on exactly what we should do during another Armageddon. Let's say we have our ladder trades and our delta and vega trades all in place. Then what exactly should we do when Armageddon hits? I will say from personal experience, mass panic was not effective strategy. Well, if you have enough vega hedges as planned, I hope you won't have much sleep, because this is likely to happen again during the night session. With a good mood, I hope you will be taking profit from the vega hedges and using that profit only partially to roll or close all your problematic short puts. I don't think it's going to be any liquidity issue at that time, because when everybody else will try to buy long puts, you will be selling them. That's what should we do, right? So we just cash profit from our hedges and use that profit to adjust our problematic trades. Question number 2: do you adjust your plan due to an event like FOMC coming that week? Well, if I believe that this event is very important and could lead to significant crash, I will most likely to delay opening in new tranches and roll the problematic short puts even before they hit Delta 20. This is how I'm gonna probably do if expecting this kind of event. Number 3, when are your courses coming out? Well, guys, I kindly ask you to wait a little bit longer, as there are a lot of work to be done during falling market. Don't forget that I have a couple of my own portfolios, plus I run a couple of portfolios of my friends, so quite busy. So also I'm at the middle of house renovation, so it's hard to organize myself. I hope that next week we will post something at least. I think at least in parts, which will be added a little bit later, but you will get it. Number 4, what is real expectancy per month in percentage of small account, let's say 30,000? Well, it depends of how much the market cooperates with us. I believe a target of around 2 to 4% per month is quite reasonable. And last question: how would you hedge delta or vega with classic SPY SPX LEAP 365 days short put campaign, which well, for 500,000 account, portfolio margin, and so on. Guys, first of all, I believe that selling long dated puts as a source of income is not very effective approach. It is somewhat lazy strategy for traders who don't don't know how to protect themselves. They think that if they sell long-term put at Delta 5, it's hard to reach, but it's not actually true, because if how we witnessed, if volatility increased 2 times, that 5 delta puts very fast become a 30 delta puts, and it's unclear. At least I don't know how to hedge them and where to roll them if they're already long term. So this is why I suggest a different approach: long-term hedges combined with short-term income-generating puts. This is what we're doing now. That's it for today. I hope you are happy with our performance so far, and don't forget for people who is not part of our community, you can always join us for free using invitation below to join our Discord channel. And if you just 100 euro per month. Thank you, guys, and see you next week.